So now if I made a 10 profit movement by buying Euro USD, it simply means that if I used a standard lot, out of those 10 pips that I would have made as a profit, each pip there is worth $10. Okay, guys, so how is money PNL made in Forex, right? So we have what is called pips, right? So in that number of an exchange rate, which is, for example, in this case, suppose we're trading maybe Euro USD, and Euro USD is trading at 1.1235, right? So when you calculate pips, you start calculating the number of pips that you would have made when you bought or sold a currency. You calculate that number with the numbers that are after the comma, right? So that is what you call pips. So if you bought a currency pair and then that actually goes into profits, then whatever difference that you would have made from your entry point to your exit point. So when I'm talking about an exit point, it can be an entry and then it goes against you into losses. And you can also enter a trade and then it can go into profits. So that difference from your entry point to your exit point is what is called pips. And you start calculating pips using the numbers after the comma, which is in this case, it is the fourth digit after the comma, right? So that is basically that is what is called, right? So if we're trading, for example, Euro USD, right? And then from 1.1235, and then luckily the market goes into our favor because we're expecting the euros to be stronger than the dollars, right? So this simply means that you take the difference from your entry point, from the price at which you bought it, and to the price at which you sold it to another trader, right? When you are actually closing your positions. So that means, let's say you randomly made like 10 pip profit. So that is, as I said at the beginning of the video, that it is not yet in monetary value, but that difference is what is called pips, right? So yeah, that's the difference, but I will get into it deeper on the next slide, right? So when it comes to pairs that involve the Japanese yen, so what I also want you to know is that USD, it means United States, and then the D stands for the currency. And the same thing, yeah, JPY, that means it's Japan, Japanese yen, right? So when you're calculating pips with currencies that involve the Japanese yen, then the number changes. The method or the anatomy is still the same, but it's just the change in numbers, because that's still in the same way that in that 1.1235 means that a value of a euro in dollars. That also means that on this example of USD JPY, which is on my on my fifth point, it simply means that the value of a single dollar in Japanese yen is 136.52. And then in still the same, the method is still the same. I calculated the difference from your entry point to your exit or to your stop loss by the numbers after the comma. So let's say, for example, we bought USD JPY or we sold, and then the market goes into our favor by 23 pips. That is the amount of pips that we would have made. That is our profit, but we do not yet know how much is it going to be in monetary value, right? So moving forward now to how do we actually determine how much we would have made from that pip movement, right? So how to know and calculate pip value. So we have what is called lot sizing. So as I said on the first point, lot sizing helps us determine the value of our pips, and it stands a chance of increasing our profits with not big but reasonable amounts of money in our trading account. It also carries a minimum marginal risk requirement and is the amount of risk capital to maintain a position. and each pip has its monetary value, right? So another thing that I want you to know is that when you buy or sell a currency, you are basically buying a number of units of that currency. If you head back to that example of Euro USD, it simply means that if we are buying Euro USD, we are buying the dollars, the euros, and we are selling the dollars, right? So in order to calculate the value of our pips, we use what is called lot sizing. Right. Lot sizing is also something that a broker allows you to use in order to maximize your profits, right? So we have what is called lot sizing. Standard lot, right? So the first one is a standard lot. This simply means that if we are now buying Euro USD on the MetaTrader 4 platform and we decide to use a standard lot, which is 1.00, right? It simply means that we are buying, if we are buying Euro USD, we are basically buying 100,000 units of euros, and we are also selling at the same time 100,000 units of dollars. So now if I made a 10 profit movement by buying Euro USD, it simply means that if I used a standard lot, out of those 10 pips that I would have made as a profit, each pip there is worth $10. So if now we wanted to know how much is my 10 pip profit, having used a standard lot, it basically means that we're going to take that 10 and multiply by that $10 per pip, and we're going to get, we would have made a profit of 100 US dollars. That is basically what it means if you use what is called a standard lot. It means that if we buy Euro USD and it goes into our favor by 10 pips, which is from your entry point to your exit point, which is your exit point being the price at which you sold that currency pay, it simply means that if we use a standard lot, each pip out of that 10, if I want to know how much is that all worth in monetary value, it is going to be worth $10 per pip. And then you're going to take the number of your pips that you would have made and multiply that by the value per pip, right? And then you would have made a profit of 100 US dollars. And then if you now have an account in rands, in US dollars, and you are a trader from South Africa, that means you're going to take that 100 and multiply it by a value of a dollar, a value of a single dollar into rands, and then that's approximately somewhere around about 1,400. That means you would have made a profit of 1,400 rands, right? And then it's the same thing when it comes to a mini lot. It means if we are buying Euro USD, and going back to that example that I made, that if we buy Euro USD and then it goes up or down by 10 pips, if it's a profit or even if it's a loss, it simply means that we are buying 10,000 units of euros. And then to determine how much that 10 pip profit or loss, it simply means that each and every pip that we would have made out of that 10 is worth a single dollar. Then you're going to take those 10 pips and multiply that by 1. That means if you now used a mini lot or bought 10,000 units of Euro USD, you would have made $10. And then if you have your account in dollars, but you are from South Africa, that means you're going to take that 10 and multiply that by the value of a single dollar into rands. And then that's something around about 140, right? Because 10 times 1 is going to be $10. And then let's say maybe if a value of a dollar in rands is 14 rand, then that means you're going to 10 times that number, then you're going to get 140 if my calculations are correct. And then it's still the same thing when it comes to micro lot. But I need you to be careful when it comes to this thing. It can work for you if it goes into profits, and then it can also work against you if it goes into losses. That is why it's always emphasized that you must risk at least 2 or 1% of your account. Because in as much as it is nice to make as little as 10 pips, but if you become aggressive with your account, that means you also stand better chances of losing or blowing your account within few trades or like within a short space period of time, right? So a lot sizing can work for you or it can work against you, but in order to determine which lot sizing one must use, you must carefully look at how much is available in your trading account, because it would not make sense for you in a $1,000 account to use a standard lot, especially if you're a beginner trader and then you use a standard lot, because that simply means that if you have 5 trades running or 5 positions losing, that means you would, and then your losses, let's say maybe you lose that 10 pip as a stop loss, then that means you're going to take that 10 and multiply by the number of your trades, which is 50, right? So 10 times 5 is going to be 50. That means you from only 5 trades or positions, you would lose $50, right? $50. And then if you're using a South African rand thingy, then that means you're going to take that $50 and multiply by a value of the rand, and then that you will get the amount of money that you would lose. So when it comes to this standard lots of thing, you must use them according to your account size, according to your risk tolerance, according to how much money are you willing to lose, because in forex is a skill that you need. You build it, it gets better and better over time, right? So that's why you must look at these things with like you need to be cautious with which lot sizing are you going to use and for what good reason, so that you can protect the amount of money that is in your trading account, right? So it's not recommended for a novice trader or a beginner to outright use standard lot with the lack of experience, because that means it's going to only take you a couple of trades for you to blow your account, and that is not what we want. So moving forward now, so here is the formula. So how do you calculate, how do you know how much pips I would have made? So it's like the number of pips you are depending on, you first determine which lot sizing are you going to use, and then if you make a profit or a loss, then you calculate the number of pips that you would have made and multiply by the value of a pip, which basically means the value of a pip will come from the lot sizing that you would have used. All right, so example, yeah, if we buy euro USD and then we make a profit of 50 pips having used the standard lot, it simply means that we bought 100,000 units of euros. And then if we want to know how much that is worth, or how much is our profit in monetary value, we're simply going to take 50 pips and multiply that by 10, because that means a single pip, if we use the standard lot, a single pip that we make is worth $10, right? So we multiply that by 50 and multiply by the 10. That means you would have made 500 profit in monetary value, right? So that is basically how you calculated the amount of money that you would have made. It depends on the lot sizing that you have used, the currency pair that you are trading, and also how much do you have on your trading account available. Because like I said, it does not make sense for someone who's a beginner who does not have experience with a small account to, even if you are experienced, but with a small account, and then boom, you use a standard lot, because in as much as you stand better chances of making a lot of money, but you must be aware that if it goes against you, you will also lose as much if you do not use a stop loss, right?